Ultimately, the thing that is going to drive this more than anything else is the debt limit. So the Treasury is going to have to suspend normal operations by the end of this month.
Right.
But they probably can get into the middle of February or into March with their extraordinary measures. But ultimately, that's the thing that they have to reach an agreement on ultimately. And so I think it may take that long to get a deal.
And up to this point, anyway, they've been separate. The fiscal cliff has been one negotiation. We haven't even talked about the debt limit. They haven't gone there. Why does this suddenly then become linked as we go out in time?
Well, partly it's just time. The debt limit has actually been in part of the negotiation. So Secretary Geithner, when he went up to the Hill, presented one proposal. The Boehner came back with what was a fairly de minimis proposal. So it's been on the fringes of it. It's frankly the hardest part.
Why?
And that's part. Well,
I mean, if we can't even agree on whether to tax people above $250,000, I would think a debt limit for the entire country is even harder.
The president and the administration has essentially said they're not going to give anything to get the debt limit. And the Republicans have come back very hard against that from the get-go. I think what they have said going back to the negotiations in 2011 is they want to see spending cuts matched one for one with the debt limit increase. That's a very high bar. So if you look at, say, the zip code for spending cuts we've been talking about, which is roughly $1 trillion, that only buys you about a year. I think everybody would think we ought to get this at least beyond the next election. That's going to take a $2 trillion increase in the debt limit. Not clear that you can get spending cuts of that magnitude, so this is a very hard thing for them to get around.
So for 2013, what's the fiscal drag going to be, and what is your expectation for U.S. growth as well as global growth?
So our formal forecast has about a full percentage point of fiscal drag in 2013. That's, I think, sort of pretty much in line with where most people are. So I am assuming we are going to get a deal that pushes off most of the fiscal cliff. But I have to tell you, the concern about the negotiations is increasing. I think the disruption to the first quarter just coming from financial markets and the uncertainty is getting worse. And then our forecast for over the course of the year kind of assumes that you get this behind us and we have a better second half than a first half. I think the more contentious this becomes, I think the more you have to call that into question.
So can we delineate sort of first half and second half growth if we do get a deal by, say, St. Patty's Day, if that's the red line? Because most other economists also think first half low growth, second half off to the races.
I think it very much depends on what the political outcome is.
What the quality of the deal is? What
the quality of the deal is, and can you make progress on other things going forward. One of the things I'm watching very closely is tax reform. We desperately need tax reform. The administration has come out in favor of it. Obviously, the Republicans are in favor of it. If we can, in the follow-up to a deal, do fundamental tax reform in 2013, I think that is potentially very positive.
You know what's curious, what you just said? As follow-up to a deal, as though entitlement reform, balancing the budget, separate from all that. And that's the problem, right? Because everyone's looking at all these separate little buckets or little pieces instead of a comprehensive deal. Isn't that the problem?
Well, I think you've got to fit all these pieces together. I think you're absolutely right. So what I think both sides are trying to get to is a deal that would lay out a framework for broader deficit reduction in 2013. That would include tax reform. It would include entitlement reform as part of that. If we can get to that, then I think that second half forecast is much more bright. If we get something less than that, then the worst case scenario would be we get to the debt limit and we extend it for a few months and go through this a series of times over the course of the year. That's the worst case outcome.
Does Treasury have any magic rabbit it can pull out of a hat to avert disaster release and inability to spend?
I think they've been pretty clear that they laid out the parameters of what they can do in 2011. They do have these extraordinary measures that buy them some time, but ultimately those aren't going to get you, you can't go on forever with those.
It's a matter of weeks, in other words.
I think, yes. I think we're talking, 6 to 8 weeks on the minimum. It's hard to see how they get beyond the end of the first quarter. And I don't think they really have any other option to sort of manage this once you get to that point.
Yeah, Louis Alexander, the chief economist at Nomura, thank you for a dose of reality on an otherwise cheery day.
Sorry for the lump of coal.
No, it's part of the deal. We're all in this one together.